Okay, let's look at how we are going to reconcile the bank on QuickBooks. So one of the great features in QuickBooks is reconciling your bank. So if you come up here to your little gear, you can click on Reconcile. Then you want to reconcile your account. So what you would like to do, ideally, is to take the balance from your bank. Okay, so this is my bank account here. So I'm going to click on that here. I want to put in my ending balance and my ending date. Okay. So I will go out and grab my balance, and then I will come back and put it in here. Okay, so I'm going to put my balance in here, and I'm going to start reconciling. Okay, so I know that this is my ending statement balance. Not really sure where they got that beginning balance from, but so we need to find 3321. Okay, so what you would do is you would take your, let's see where, okay, so here's my bank statement. So ideally you would print this out, and then you could go to your QuickBooks, and what you can do is have your bank statement up next to it, and you can mark things off as you go. So you always want to mark off all of your transactions, all of your credits. Remember, your credits are your revenue. It's either going to be your revenue or it's going to be money that you are adding into your account, okay? All right. So I would just go through here and check off anything that I was able to tie back to my statement, okay? Now I know that I added something in here on purpose so that I would have to reconcile it. Okay. All right, so it's going to automatically check everything as being ready to bring in. All right, so you would want to go through and figure out what in here is not correct. So you just bring your statement up. Now let's see if we can just tie out a couple of things. Okay, so let's see. So let's take our deposits first. Okay. All right. Nope. Okay, so here's our deposits. Here is our bank statement. So we want to see if we can reconcile between the two of them. So we had, let's see. Yeah. All right, now I'm only looking at October. So I am trying to find transactions. See here, this 1964.86. Those two agree. I could mark those off. That one is correct. Now, one thing you can do is by clearance date. So you see this $25 up here? This is where I'm off. You see this $24? I am mostly off by that amount. So I know I put that in there. I put it in there on purpose. There we go. All right, so now we have them in here. All right, we have our bank statement. All right, so let's go back and find that. Okay, so right here, this one is correct. We can check that one off. Let's see if we can find this. 2000, there it is. We can check that one off. So you see how this works. You just go back and forth and checking them off. Okay, and then you can figure out where it's off. So I saw that one, I saw that one. Okay. Okay. I saw this one. I see this one. I see this one. So remember, when it goes into your bank may be slightly different than when it shows up in here, because it may take a couple of days for it to clear. Well, on your QuickBooks side, it's going to be the day that you actually received it, or the day that it was earned. So the day it was sent out, it might show up on different dates over here than it does over here. So you really just want to check the amounts and make sure that you are agreeing the amounts. So there's the 160.51. Okay, I see these right here. I see the 57.21. Okay, so this is how you go through and take care of all of your differences. Now, what you would want to do is you would want to go through and do it 1 month at a time. Okay, so if you brought all of your stuff in like I did, then you would have multiple months that you would have to do together. So you could just take your statements, go through and check them all off, and then you will be able to reconcile it. Okay, so you're going to do the exact same thing with the payments. Okay, so you would bring up your statement, and you would come down here to your debits. Okay, and then you are looking for the same amounts. So let's see. So see, like here, this one's correct, this one's correct. So this is what you would do. You would go through and you check them off as you go. So to get them unchecked, you check at the top here to say yes, and then you uncheck it. Okay, and that will take everything out. So you can do your deposits first. Okay, and then you can come back and you can do your payments. Okay. All right, so of course we're going to have a difference because these dates are not included in our bank statement. Okay. So I would want to make sure that these are not included. And boom, look at there. So we have reconciled our bank, and we just click on Finish Now. And I have reconciled my account. So now I know that what is in my QuickBooks matches what is in my bank. So if you are going to do PayPal, you would want to reconcile that. If you're going to do a credit card, you would want to reconcile that. So you always do it, if you possibly can, from a statement. Take a statement, go to your QuickBooks, and make sure that it matches. So just remember, print out your statement from your bank, and you just go through and you just check them off as you go. Okay, so the first time is a little difficult, and after that, it gets a lot easier. So that's how you reconcile your account. Okay, so you would want to do this. So even if you are using a personal credit card, it's a really good idea to go ahead and put the credit card in your QuickBooks, and then just exclude any of the transactions that are really personal and not related to your business. It's a very common thing for people to use their personal credit cards when they're buying things for business. You just want to make sure you keep the receipts and that you can prove it's for your business. It's a lot easier if you have credit cards that are for your business, but you know what, if for some reason you can't qualify for one and you have to use your personal one, then just make sure you keep really good records, okay? What you don't want to do is you don't want to intermingle your bank funds themselves. IRS really doesn't like that. So if you need to start a business account and you need to put money in there, then you take money out of your personal account and you deposit it into your bank account. The IRS knows that you are going to be taking some of your own personal money and you're going to be putting it into your business account. Using a credit card is a little bit different. They don't like it, but they're not going to have a fit like they would if you are using your personal banking account to do your business from. So just make sure you keep that separate. It is really important. It's important for the future of your business. And it's just a really good practice to get into and to keep up with. All right, well, if you have any questions on the QuickBooks, let me know, and I will be happy to answer any questions that you have. Okay? So make sure you stay current on your records, because tax time will be here before you know it, and having these records in a program like QuickBooks is going to make it so much faster than if you are just keeping a box of receipts.